Hello, everyone. Welcome back to MarketBeat Monday. We're so glad to have you join us. If you've never been here for a MarketBeat Monday before, we are all about going over the stocks that you want to hear about. You can put in the chat any of the stocks you want to hear about today. We're going to get to as many as we can. We already have a lot of different names that came in on our YouTube videos over the past few days, and some people joining us early. Thanks for being here in the chat right away. Joining us, as always, for MarketBeat Monday, our MarketBeat analysts, Chris Markoch and Thomas Hughes. Guys, thanks so much for being here today. We're going to start off right away with that heat map because there's a lot of red out there today. Thankful for Google. Google's kind of holding the only green spot in the heat map, but a lot of sell-off, especially in tech today, kind of all over the place. What do you guys think?
Right, as far as the sell-off, I see. Oh, excuse me. This is kind of a broad market sell-off, but I think it's just profit taking after the big run-up we've seen over the summer since the spring. The market's kind of waiting to hear what happens from the retailers this week, but also from Nvidia, which right now I consider to be the most important earnings report of the season. It will affirm if the AI trade is still really gaining momentum, or if now we're just waiting for it to kind of run its course and move its way through the market. But we're looking for Nvidia to have a pretty strong report. So I think that we'll see buying pick up again, pretty soon.
Yeah, you mentioned a good one there. Nvidia is a big one. Earnings coming up this week, so there's a lot to consider there. Jennifer Lamb, thanks for watching. She said, bloody day today. I think a lot of investors are feeling this right now. That's a lot of red in the heat map, and this isn't the first day. I think we had some rough days last week too. But let's put it in perspective a little bit. What kind of a downturn are we dealing with? Which markets have been hit the most today, Chris?
Yeah, so the Russell was hit the hardest. That's the small cap index. That was down over 2%, and the Dow after that was the second hardest hit. But in fairness, the Dow was dragged down largely because, again, Nvidia was dragged down. So Nvidia carries a lot of weight on the Dow, and it was down. The other indexes were down around 1% or so, right in that range. And so I think it's a big number. It's not something that's pleasant when you see the Dow down 700 points, but 700 points off of a $46,000 index is something that investors have to keep in perspective. Now, if we keep having $700 drops over a series of days, that's going to become a bigger story. But right now, I think it's as we were talking about before we got started, I think there's some profit taking happening. I think there's been a lot of talking down this market over the past couple of weeks. People have been saying market's overbought, and eventually I think retail investors are just listening, and they're taking some money off the table right now. And I think everybody's waiting for Nvidia.
Right. As far as this being a sell-off, if you look at these charts, it's more of a volatile period than a sell-off. So the S&P 500 has been selling off for 4 weeks in a row, but it's really just trading within a 5-week trading range.
Yeah.
Sort of forming a peak. It's near all-time highs. What's happening in the charts is the indicators are kind of cooling down and kind of pulling back and setting up to where the rally could now continue, provided we get that catalyst. Since we're looking at a fundamentally bullish market, I think Nvidia's report will be a catalyst.
I agree.
Yeah, let's go ahead and look up Nvidia's stock chart right now a little bit. This one's, again, like you said, one of the rougher ones today, down about almost 5% in 5 days. So this is a pretty big pullback for Nvidia, and we see volatility around Nvidia's stock every time earnings season comes up. But we usually, in the past, I feel like we've historically seen a run up to Nvidia earnings report, and then when earnings come, no matter what happens, it seems that we have some kind of pullback or volatility post earnings. But I don't know, have we seen this before pre-earnings for Nvidia?
The volatility, yeah, sure. The stock has been running up since the spring. It's up pretty significantly. Within the last couple of weeks, we've broken out to new highs. Since then, we've had 3 weeks of selling, but at those highs. We're not moving lower. We're just moving sideways, kind of backing and filling within that level. Some market rotation probably. You look at the institutional activity, you can see that institutions have been selling Nvidia mildly in the first part of Q4, kind of ahead of the upcoming release. Profit taking, it kind of aligns with the chart action. I think that once the release comes in, we're expecting more growth to reaffirm the long-term outlook, and all of that just points to continued accumulation of this stock.
Yeah, speaking of long-term outlook, I've got the consensus price targets in, and those price targets are still really positive for Nvidia. Again, the consensus price of almost 240 is a big upside from where the stock is right now. On the high side, we've got pretty recent analyst forecast around 350, or at least close to 300. So, do you still believe in that long-term outlook, even though we're seeing some major volatility in Nvidia right now?
Well, yeah, because one of these things with the analyst trends, I just saw that Nvidia is still on the most upgraded list, which means that it's still getting lots of upgrades. There's still lots of analysts still lifting their sentiment. There's still lots of euphoria in the market. It's still kind of a blossoming outlook, and I think that this report is going to affirm that. We're going to get more deal news, more guidance news that just kind of goes in alignment with what we've been seeing, which is just really robust demand, and demand being bigger than what we thought it was.
Yep.
Yeah, and for those of you who are going to be watching that NVIDIA earnings report on Monday, you can join me and Thomas. We are going to be live starting at about 4:30 Eastern time. You can subscribe to the channel. You'll get an alert as soon as we're live. Thomas and I, again, are going to do a live look at NVIDIA earnings as soon as it's live on Wednesday night, and then we can join that earnings call live as well to listen in, and also just take a peek at what the market does during those, as those results come in for NVIDIA on Wednesday. So if you like joining lives like this one, join me and Thomas again on Wednesday to kind of break down some of those results. All right, that's a lot of NVIDIA talk for today. There's a lot of comments with a lot of different stocks right now. I think a lot of investors, retail investors, when they start to see a sell-off like this, they wonder, are we in a crash? What should we do? Do we hold our position, especially on some of these smaller buys? A couple of different small names that we want to talk about are AMPX and Dragonfly. These are two stocks we've talked about on the channel quite a bit that are seeing kind of a free fall right now. So let's pull up Dragonfly first. This is DRPO. If investors have been into that stock before, we've had the CEO on the channel before on to talk about different investments happening into drones and into the drone market. Let's talk about what you guys think is going on with this stock.
Well, like we were saying, before we started shooting, Dragonfly is kind of like the big bear AI of the drone market. It seems like it should be doing a lot better, but it just doesn't seem to be. It doesn't seem to be getting quite the deal volume that it should. There's not the revenue that it should have. There's not a lot of growth in the outlook. And then when you come down to what's really important, which is market support, there's not a lot of analyst support, not a lot of institutional support, and there is a lot of short interest, which means there's just a lot of resistance to higher prices and not really a lot of reasons to buy it. That could change. They could get a deal. They could start making money. But right now it's not happening.
Yeah. We were talking about that, and we said, this company that's been around for 24 years, and it certainly, you would expect it to be doing a better business than what it's doing right now.
Yeah.
Right.
Interesting one. Go ahead.
Sorry. But like along these lines with this business, it's in drones. It's trying to develop these next generation technologies. It's competing with the entire slate of defense stocks. All of these big giant mega corporations that have entrenched businesses are also making robots and drones and are working with other more successful drone companies. So there's an intense competition. And then in the event that this company does happen to come up with something that's good and starts getting demand, it's just going to get bought out and become part of some other company anyway.
Yeah, interesting way to look at that one. So just a brief outlook on DRPO for those wondering. Again, let's go to another one we talked about on this channel a lot, and that's AMPX. This is one of Thomas's favorite stocks out there, and it's definitely taken a dive down about over 16% in the last 5 days. What's going on with AMPX?
Again, I just think this is a natural market mechanic, a sell-off, profit taking after a nice run higher. Unlike Dragonfly, this company does have business, does have demand, has a ramping production capacity, has a pretty robust outlook, all been affirmed in the results and in the analyst coverage and in the institutional coverage. We have clearly rising volume to support this uptrend. So, right now the stock is pulling back, but it looks like a pretty good stock. And in my experience, pretty good stocks that pull back will move higher eventually. And if I sell now, I'm going to lose my money. I might as well just hold on to it till later. Try to ignore the volatility. Don't trade it. Don't chase it, and just let it do its thing, which is going to be trending higher, I think, over the long term.
Yeah, I've got the consensus price rating up for this one too, and what the analysts are saying about
Yeah.
AMPX. And there's still a lot of upside. There's still a lot of positive sentiment for this stock too. I think this is a good time, Chris, to talk about kind of that warning when you're dealing with any kind of small cap company. That's a good idea. This kind of volatility that we've seen in DRPO, AMPX, and several of the other small cap stocks we're going to talk about on the yet today. What kind of volatility can investors just expect in this kind of a sector, the small cap sector?
Well, yeah. I mean, I think they can expect outsized volatility as opposed to something you might expect with a large cap or with a mega cap. I mean, these are you're dealing with a company with Amprius that I agree with Thomas. You're seeing strong revenue growth in the last year. I mean, you're not talking just a little revenue growth. You're talking about huge revenue growth in the last year, and that is coming from the fact that they have actual deals that are in place that are that are pointing to future revenue growth, and probably they're getting closer to profitability. I don't know when they might be forecasting that, but they're obviously getting closer to profitability. But it's still an unprofitable company, and you can expect that these stocks are going to be volatile. That's kind of the ticket to ride. If you want to be in the stock, it's going to be volatile. But I agree with Thomas. Right now, it seems like selling would be counterproductive because there's nothing in the chart action, there's nothing in the company's fundamentals that suggests that this is anything more than maybe just a little bit of profit taking. And the institutional buying has been huge. I agree with Thomas. I just looked at that when Thomas said it. It's huge. Institutions are buying this way more than they're selling it. So
Right.
that says something.
Now, regarding profitability, I'm looking at these long-term consensus estimates and looking for profits by 2027.
Okay.
And on that note, with the way the recent deal volume has been and the last earnings release, the outperformance and the increased guidance, this timeline to profitability is really shortening. So each quarter they're going to be closer than they were to profitability than previously. Not only because it's another quarter, farther along, but because they will have had a much more robust quarter than expected, and they will have reached that tipping point a little bit quicker than expected.
Right.
Yeah, there's a lot of different small cap names. I feel like the market right now, every stock we talk about, at least the ones that I'm pulling up the charts of a few different names that you guys are putting in the chat. Thanks again for those of you putting the names in. I'm getting to them as quick as I can. There's a lot of names today. I feel like, Chris and Thomas, a lot of these stocks are in the same boat. So we're going to pull up the charts. I've got 3 other names pulled up, but they all look similar stories right now. We've got Big Bear, BBAI, we're going to cover next. NVTS, Navitas Semiconductor is another one we covered on MarketBeat Mondays many times. And then DataVault AI, DVLT. This is a name a lot of people want to hear about too. So you mentioned Big Bear AI, so I'm going to pull that one up right away. This is one early on, really just a couple of months ago, investors were really excited about. And now it's just not doing much of anything except pulling back. We're down almost 23% in 5 days. That's a lot of moves for this stock. Do we see this one recovering sooner rather than later? Is this a long-term play? What are your thoughts on where BBAI is right now?
This is a tough one because this is a company that should be doing better than it is, like you were saying before. Well positioned in AI, has exposure to the defense industry, has unique product, but just isn't producing the results.
Right.
The last earnings release provided some inspiration for analysts to provide some positive comments. We got the stock to shoot up, but ultimately it was just some short covering and possibly retail investors trying to get in on the rally before it started. But what happened since then is that resistance was confirmed. The stock has fallen back to new lows. It looks like it's going to continue to trend sideways within this range, possibly move down to the 450 region, maybe even lower, just because the revenue outlook is not ramping. It's not producing really robust results. It's not making profits. And there's just not a lot of market support because, even though the analysts were a little bit, more positive after the release, there wasn't a lot of upgrades or price target increases. And there certainly isn't very much institutional activity to suggest that the market's really, interested in this stock and holding on to it.
Right.
Yeah, I think that's a good look at that one. We're going to fly through as many as we can pretty quick here. So let's get to Navitas Semiconductor. First of all, do you guys remember what this company is all about?
Yeah, let me.
NVTS, I can tell you that one's down almost 11% in 5 days, but for the month, it's down almost 50%. So it's taken a really big dive
Right.
from
So
where it
this is
was.
yeah, these are like silicon carbide and gallium nitride semiconductors. These are the tougher ones for industrial purposes, good for like power switching, power changing
Right.
applications, good for like EVs and autonomous vehicles. Um, Markets, revenue, right? But still really high short interest. I don't see any really great news in the news stream.
Yeah. I've
Yeah.
been looking.
Yeah, revenue was down 53% in the last report. That's not great. Um, it looks like a company that's, possibly well positioned for a semiconductor super cycle that I think is budding, because I've seen some of that evidence in other, not this same competitors, but other, excuse me, analog chips and other chips for industrial purposes. Um, yeah, but right now it's just not happening for it. It looks like the charts are pretty tough too. Big spike up in October, sold off pretty hard. Definitely have resistance at the top of the trading range. Um, Looks like this one's probably going to trend sideways, if not move lower over the next couple of quarters.
Yeah, I think this is a good time to talk about. I think I'm already starting to feel a little heavier talking about all of these stocks that are down. We haven't seen a positive chart yet.
Mm.
I think we'll have to get to talking about what's going on with Google and Alphabet in just a minute, just to give us something positive to talk about. But before we get to a couple more names, let's just talk about during downtimes like this for retail investors, especially, and especially in some of these names that have been really big money makers that have been up hundreds of percent in just a few months. Is this still a win for investors who got in early? Maybe there's some who are really hurting right now. Thoughts on just in general, if we keep seeing the same story with all of these small cap stocks down right now, what should retail investors do? And does it just depend on the individual stock?
Well, I mean, generally speaking, you want to keep your positions small so that no one position ever hurts your account real bad. You want to have stop losses so that if the position, the trade doesn't go your way, you're say, I'm going to lose 15%, 20%, 30%, then I'm going to cut it loose and walk away from it.
Right.
On the flip side, you need to tell yourself that if you're making profits, to set trigger points where you take profits. If a stock moves up 100%, it's a really good idea to take 50% off the table, because then you get back your original money. What's left is just your profits. So, I mean, yeah, you need to have trading rules that help you manage those things, manage your losses, and help you take profits.
Good advice. Let's move on to a couple other names now too. I've got DataVault next, DVLT. This is a tiny company. It's been on the channel lots of times before though, so it's a good one to bring up again. This one was up at 3, and now it's all the way down to, 191. It's up a little bit from the bottom of where it was, but this is one I think, Thomas, that you had talked about, right?
Right. It looks like they reported earnings today. Looks like they raised their guidance. They've got a new deal to be a technology partner with another large company. So it just looks like the story is starting to evolve. DataVault has kind of made a transition to where it's trying to help companies monetize their data and sell it on cryptocurrency platforms. And it's had some affirming news with some partnerships providing some funding. So it just looks like the results affirm that outlook. Right now, we're still in a really like low or no revenue phase and really like no earning phase. So there's going to be volatility, but it does look like the outlook is starting to brighten, and it is being affirmed by the news flow.
All right, very good. That's a good look at DataVault. Again, tiny stock some of our viewers have got into just from seeing it brought up on MarketBeat Mondays before, or when you talked about it before. So another good name to follow a little bit. Here's another one that's been hurting some investors, and we talked about on the channel before. That's NBIS. This is Nebius Group. I'm pulling up that chart right away, give you guys some time to look at it. And Nebius is down about 8% in the last 5 days, about 23% in the last month. Really taking another nosedive for that one too. This is a company that is a technology company that builds intelligence products and services powered by machine learning and other technologies. I don't know if you guys remember kind of what sets Nebius Group apart and why some investors have been interested in it.
Well, they're a data center company. They're based in Europe, so they're providing data centers for AI in Europe. So that's really their draw right now. Regarding the sell-off, it just aligns with the general market sell-off. But this is a company that had a very volatile and very robust move. So the sell-off is going to be more robust than the average one. Right now, it looks like support is still above previous critical levels. So I would assume that the market will continue to trend higher. What I do want to point out, and something else that I also see throughout the market, so the market is selling off broadly together. Most of these charts also exhibit MACD convergences. So these recent peaks are some of the strongest markets that we've seen in a long, long time. Right. Convergences means that these markets are probably going to reverse real soon and move back up and retest their recent highs. And a lot of these stocks are going to keep going higher and setting new highs because the outlook for their revenue and their earnings growth is so good. And
right.
Oh, sorry, Chris.
No, go ahead. To that point, to that point that you just made about the revenue, and I think that's what's really interesting to me, because the stock's down about, like Bridget said, about 8% in the last 5 days, and some of that is probably due to the fact that they missed on the top line when they reported on November 11th, but that miss on the top line was still way above where they were year over year. So they were expected to report 155 million. They brought in 146 million, but then I look at the year over year, and that was still over 100 million more than what they did last year. So
right.
I think it's an overreaction to one bad data point, but the data point really wasn't that bad.
Well, right. So this is another nice, really swelling AI outlook, because we've got deals with Meta and I think Microsoft recently. This company is providing computing power for their internal purposes. I mean, these people need them just to be able to do their own work, to make their own AI. Right. So, I mean, it's huge. The demand is going to be giant. I think that Nebius is going to be a winner long term. And the charts look like we should be seeing the, a rebound pretty quickly.
Yeah, one thing I wanted to point out before we take off, and this has kind of been a similar story for several of these stocks. I've got the consensus price target up right now, and it's almost 140, a 62% upside based on analyst price targets. The high end is $211, so a huge outlook from some analysts on these stocks. So as we see the price pullback that we're seeing right now this week and some of last week too, do we expect to see any of those analyst targets change, or do those still hold? I mean, some of these are pretty recent.
Right. So those aren't going to change because the stock market is volatile. They might change as the news comes out, but right now the news flow is supporting a positive uptrend. So I would expect them to continue lifting their targets. And just a matter of time for the market and sentiment to come into alignment. Right now, what you said, there's a pretty wide range of targets too, a pretty wide range between the consensus and between the high end, and consensus is up pretty high. It was up a pretty I'm having a hard time today. Is up pretty hard over the last year. It's up or not the last year, the last couple of months. It's only been trading for a few months, but up 100% in the last 3 months. So a lot of revisions, a lot of uncertainty. The market kind of ran ahead of consensus. It's moving back to consolidate, touch base on consensus. The trend is still moving it higher. So definitely would expect to see it move back up to retest those highs, if not set new highs.
Good. Well, I've got a couple other names here to cover of small ones before we get back to a couple of the large cap stocks that people are asking about. The last two small caps for now, and then we'll get back to them again. I want to talk about CoreWeave, because this one's had a lot of moves and has been in so many headlines this year. And then let's also talk about NVTS, simply because we've talked about this stock a lot on the channel before. I'm going to pull up NVTS first because it's so small. We've got...
We just did that one, didn't we?
We just did that. Navitas.
Navitas.
I'm sorry, Microvast. MVTS. Microvast.
Strategy.
There we go.
Yes. This one never really had a lot of analyst ratings. This is such a tiny stock, but I know we've talked about it on the channel before.
Right.
It's seen quite a few moves as well. Again, up 400% in a year is a pretty
Right.
big move for a small stock like this.
So this chart to me is one that I call it, it's ratcheting higher. It's moving up in fits and starts, but it's trending higher. And that looks pretty good. Um, Batteries for electric vehicles and solutions, lithium. So these are like some different kind of battery solutions.
Yeah.
It's got profits, it looks like. It's got growth. I think it just widened some margin outlook.
Yeah, Damon Baker,
Really,
thanks for watching. He said NVTS or MVST normally moves with AMPX, kind of in a similar category.
right,
Interesting comparison.
right.
That would make sense. That would make sense.
Yeah. It just looks like it's, it's just doing its thing. It's got some short interest, so that's going to increase the volatility. Let me look over here for a second.
Earnings weren't bad. They weren't blowout, but like you said, Thomas, I think it supports the idea of it's grinding higher. It wasn't a blowout report, but it was better. It was better. Revenue and earnings were both better year over year.
Yeah, right. So, and again, high short interest and not a lot of institutional or analyst coverage. So, I mean, there is some buying, there is some ownership, but there's not a lot, not enough to support it given the short interest. So that's part of the volatility. There's reasons to buy it. It moves higher pretty quickly because it's kind of a weak market, and then it hits a peak and it sells off pretty hard because it's a weak market. But right now, what we're seeing is growth and profits and widening margins and better guidance. And this ratcheting volatile market is trending higher. So I would think that this current pullback is probably going to be a buying opportunity. The question now is on the rebound, will it move up and retest the high, or will it set a new high? Because if it just retests the high, that's probably the top for this range. It'll probably top out and move into a trading range from that point. But if it moves up to set a new high, then we could expect it to continue trending higher over the next couple of quarters.
Before we get on to CoreWeave, I do want to just, I kind of forgot about asking about buying opportunities. As we talked about so many different down stocks right now, I'm going to kind of just go through the ones we've got pulled up. Any of these, are all of these ones that you would buy on the dip? Are there some that you would say, maybe not now is a time to buy? So I've got between DRPO, between AMPX, Big Bear, Navitas we covered as well, Data Vault we covered as well, and Nebius Group. Are there any of those that you would say, maybe don't buy on this dip for this one, maybe wait that one out a little bit?
Well, the ones that I would be buying are Amprius, Data Vault, and Nebius. The other ones I'm not interested in.
I would agree with Thomas. Those are the if you were going to ask me, I would say Amprius or Nebius would be the two that I would be interested in buying the dip on. I think the other ones don't really appeal to me that much.
I think that's a really good information for our viewers out there too, of to think about these as potential dip buying opportunities, or is it too dangerous to get in with a pullback this severe on some of these stocks? Last kind of small cap, although this one has had so much growth this year, it's almost out of that range. But CoreWeave, let's talk about that one. We haven't had it on the show in a little while yet. CoreWeave is down quite a bit for 1 month, almost 50%, 45% in a month. What's going on with this stock?
It had bad guidance. It wasn't the report itself. The report was fine, but it cut its guidance.
I got you. There are some supply chain delays, so it's slowing down development of data centers, and that's just kind of impacted the growth outlook. And the company has had to lean in a little bit to debt to support its growth, which are all kind of scary things for people to hear about, and certainly play into the stock price outlook. But you got to think that if the stock was worth 140 a couple of weeks ago and the outlook is still the same, it's just a little bit, farther down the line, it'll be worth 140 again, probably pretty soon. The outlook is pretty robust. So with this one, I would look for the market to bottom and, throw a buying signal and start buying some stock, I think.
It's a good thing to look at for this one. All right, let's get to some large caps. Again, we've got so many different names coming in. First off, I appreciate everybody for bringing in the names that they're interested in. I did want to share too, really quick, before we get to some of the big names out there, we're talking about, we have a brand new report out right now about the 10 best stocks for 2026. If you have not seen this yet, take a second to scan that QR code or copy the link. We'll get it in the chat here in just a minute too. Brand new report. Thomas worked on this one, the 10 best stocks to own in 2026. These are some of the big names that retail investors can look at in the new year and kind of look at getting in, or potentially if you're interested in getting in before the new year comes. So take a look, scan that report to get a jump start on the new year in stocks. All right, guys, let's get to some of those big names. Google, Alphabet, what happened with that stock today? Again, one of the only green names in the tech sector for sure.
Yeah, Alphabet. Berkshire bought it. Was really the news, and it wasn't Warren Buffett himself that bought it, but it was the fact that Berkshire bought it, and apparently there was news that said, Buffett sort of admitted that he and Charlie Munger missed that one, and apparently now Berkshire is coming back into it, and it's giving investors a lot of confidence because Alphabet's been up quite significantly this year, and the fact that Berkshire's buying into it now suggests that there's probably going to be more growth ahead of it. They're not, Berkshire wouldn't be inclined to buy the top of anything. So the fact that they're buying in would suggest that it still has room to run.
And remember, Berkshire's a cash flow, a cash flow company. They're buying into the cash flow, and they're buying into capital return and shareholder value. So that's certainly there. Some other news that came out today plays into all of that. Google has got this AI-fueled travel search engine. It's got the travel industry in the red. So if Google can start capturing, travel business and pulling that away from the travel stocks, that's just going to boost its revenue.
Yep.
Yeah. Interesting story for Google today. If you're a Google owner, I'm glad you've got at least one winner on the books for today.
Exactly.
Let's get to Meta. That's another big name that we've had a couple of people ask about. Wondering where the bottom is on Meta. That's been a question a couple of times in the chat here. Meta's been hit pretty hard. So let's go back a little bit and say why we've seen a pullback in Meta and how low it could go potentially.
Yeah, I hadn't seen that. That's a little surprising. It was
the pull from what I've understood, the pullback is largely due to the fact that Meta, they've kind of doubled down on this idea of they're going to keep spending on data centers at a time when analysts are questioning whether or not where's the ROI on all this investment, and Meta's just basically saying we're going to go full steam ahead on it. There was nothing in the earnings report that was really alarming. But I think again it was just the idea of they weren't able to answer the question that investors want to know, which is when are we going to start seeing the ROI on this? And for a stock that was already trading at over $750 a share before earnings, it had room to go down. Let's just say that.
So way back when AI first started becoming a thing, like 3 years ago,
right?
4 years ago, whenever it was, Meta was the first company for its share price to plummet because it's increased spending on AI.
Yep.
And then that plummet turned into a buying opportunity, and 3 years of rallying because the spending on AI made money. Meta is the poster child for spend on AI, make money with AI. So to me, the sell-off driven by increased spending on AI is a buying opportunity because they're going to turn around and make money with AI.
Mm-hmm.
Good outlook on Meta for sure. It's had quite a pullback. And Chris, I know I talked about in another video we had on earlier this week, talking about that pullback in Meta being kind of a punishment for the investment. So good analysis from both of you guys on what could be happening in the future of that Meta stock. One other big name, Chris, this one I'll let you start with, that a lot of viewers want to know about, and that's Palantir. We've seen some pullback on Palantir, just like the rest of the market too. What's going on with Palantir right now? Anything specific to Palantir, or is this just kind of selling off with the rest of the market?
I think it's just selling off with the rest of the market. I mean, there's really nothing that's come out that's news about the company that would be alarming at all. This is pullback off the all-time high that it made in late October, early November. Stock's down about 7% in the last 5 days, about almost 4% in the last month. I don't think this is anything to be that concerned about. It's kind of consolidating nicely. There's nothing in the chart that to me shows any level of concern or panic as far as increased selling volume or anything like that. It's just the stock was up there. The stock was up pretty high, and I think I think people are, again, they're taking some of their profit out of it. Short interest isn't. Short interest is what it is. It's going to kind of always be a little bit there with Palantir, but yes, it got whacked a little bit because of the news from Michael Burry, but that was just kind of a non-story after a couple of days, and it was just stock that just needed to cool down. It needed to take a breather, and it is. And I'm going to stand by it. I don't think you buy it. I don't think you trade it, or you don't chase it. You don't trade it. You just hold it and let it grind higher. And certainly, if this pullback becomes any more significantly pronounced, then I think, yes, it's a buying opportunity.
Right. There may be some concerns with valuation because
sure.
240 times earnings is pretty high valuation.
Absolutely.
But we are pricing in a really robust growth outlook. The news flow is affirming the outlook. It's expanding into new verticals, I think, pretty regularly. Based on these forecasts, 240 P&E this year falls down to like 21 by 2034, which is pretty reasonable. So, maybe the stock needs to consolidate for a little while at this level until we can get some more oomph into the outlook. But it's a good stock. It's on a robust growth path. It's going to make tons of cash. Eventually that cash will get turned into capital returns, and that's all good news for investors.
And Bridget, you and I, we talk about Palantir a lot, and this is something I always bring up, and I just noticed it again. If you look at actually where the stock is trading now, it's now trading below the consensus price target because the consensus price target is now up at $172, and that's just the floor just keeps getting raised on the stock. So again, I think this is a good opportunity. Depending on where you bought the stock will depend on whether you want to add to your position or not, but certainly if the stock gives back any more, it's going to be a buying opportunity.
Good. Right. All right. Well, we've got so many other stock names coming in here. I'm just picking a few at random. If you really want to get your stock talked about in the last few minutes we have here, you can do a super chat too. If you throw in a quick super chat, it'll bring it to my attention, and I'll do that one right away. I'm going to let Chris and Thomas look up these next two stocks. We've got SoundHound to talk about, and then Applied Digital. This is one that's been on the channel many times, APLD and SoundHound. As you guys are looking at those charts a little bit, just a quick note for our viewers out there too. None of these are direct buy recommendations. We talk about a lot of stock ideas that come directly from you. These are stocks that you want to talk about. Chris and Thomas give a quick analysis on the fly, but these are all things you should do your own research on before deciding to add or take away or sell. Whatever moves you make, definitely do some of your own research. Use this show, these MarketBeat Mondays, and all of our videos as a great way to find ideas on things that you want to research and look into further yourselves. I do have an interesting way to track some of the stock ideas we talk about. I'm going to talk about that in a little bit, but we have a new segment we're excited about, and that's the Bridget's Buy segment. I know a lot of you have asked about my own investments. Well, I'm going to have a watch list that you can track and follow. Every day we have a new video. I'll add a new stock to that watch list and track its progress over time too. So I'll share more about that in a little bit. But Chris and Thomas, let's get to these last couple of names here. SoundHound, let's start with that one. It's had not a great month, Thomas.
It hasn't, and it's a little surprising to me that it has pulled back as hard as it has, but I'm going to blame this on the short interest. We've got a pretty high short interest, almost 30%. Certainly is cause for the gains to be capped and for some selling pressure. But the long-term outlook is still pretty robust. We still have pretty solid analyst trends, pretty good institutional trends. Ownership's only about 20%. That plays into the decline. With the short interest as high as it is, there's not much institutional ownership, but they are buying the dip. Institutional buying has been ramping over the last few weeks. The quarter to date portion of Q4 is a multi-quarter high, and analyst trends are positive. We have price target revisions leading to $17 at consensus. That's a 50% upside from where we are right now. The high end is 26. That was recently said, and I think we've got a couple of analysts with targets in that range. So we're just looking for a catalyst to reinvigorate the market sentiment. That could come with Nvidia's report. That could come with just the market, getting bullish again, just, trying to kind of getting past this little period of consolidation. I know the earnings release wasn't bad. They're raising their guidance. So, I mean, to me, this is just a pullback within the market. It's a little bit exaggerated because of the short interest, but I think ultimately it's going to become a pretty good buying opportunity.
Good look at SoundHound. Let's get on to Applied Digital. Chris, I'll have you talk about that. Thomas, I want to give you another couple names to look up. Snowflake is one we've had on a couple of times that people want us to look at. And then Oklo, we can talk about the nuclear stocks, SMR and Oklo. We can talk about both of those. Thomas, so why don't you look at those? Chris, let's talk about Applied Digital.
Yeah. So when you're talking about Applied Digital here, we're talking about a company that's in that area of digital infrastructure, and it's also in that area of Bitcoin mining. It kind of plays a hybrid role between companies like Iron and BITG, and then you have Applied Digital, which is their data centers are used for both Bitcoin mining and this HPC workloads. I think it's been down a little bit. Again, there's a short interest story there. Short interest in the stocks up over 30%. But this is also, I think, a little bit of a Bitcoin story too, because Bitcoin has dropped significantly in the last month. And I think Applied Digital is probably tracking that a little bit as well. Again, I think it's in the right area, but it's in an area that right now I think there is just a broader sell-off going on. I think you're going to want to be, a little bit careful here, as you would be with a company like Iron, which is also down significantly in the last week or so. So I think it's just in a sector that's being hit right now. And I think a lot of it is a Bitcoin story and a little bit of short interest to sprinkle in there as well.
Yeah, I think this is one that we had talked about on the show way back here when it was that $5-6 range. So if you were an early investor, this is still quite a bit up, even though it's a considerable pullback from where it was. I think that's the story with a lot of these stocks too. Depending on when investors got in, they're still up on a lot of these names. So selling and taking some profits, keeping some of your stock in the stock is an option too. So good look at APLD. Let's get to some of those other names that we talked about. Thomas, I think let's start with Snowflake. There were a couple other, I believe Snowflake's not the financial sector, right? Remind me what that company is.
No, Snowflake is it's cloud data.
Yeah.
Their issue this week, or maybe not this week. When was that released? That wasn't for a while ago. Yeah, I think right now they're just involved with the general market pullback. I mean, there's not really been any new news released. The latest earnings release and the guidance were pretty good. As far as price action goes, 1, 2, 3, 4, 5, 6 weeks ago, we broke out to a new high. And right now what we're doing is pulling back, and we're reconfirming support at that prior breakout point, which is a pretty bullish signal. So right now what I'm seeing in Snowflake is a buying opportunity. Maybe you don't want to buy it like necessarily tomorrow, but in the next few days or maybe a week or two, we should see the market start, buying this stock and really confirm support here at this level, right around the 235, 240 level. And then from there, probably see it trend higher over time as the subsequent releases are put out.
Yeah, another one in that tech sector to talk about too. We've talked a lot about tech. Let's get to the energy stocks. We had several people who were interested in those earlier. These stocks have had such a crazy run up this year, like a lot of the names we've mentioned so far. And I think investors are sad to see all of those gains kind of disappear in just the last few weeks. Right.
Again, these are markets that have been surging on this really blossoming outlook. The last few weeks, they've been selling off. A lot of that's to do with short interest and the fact that they don't have revenue or earnings. But within all of this, the outlook is blossoming. The regulatory process has been really cleared. They've been advancing their technologies. Oklo especially is on track to really begin operations within the next year or so, 18 months, start producing revenue. And that's all good news for the stock price. Within the charts, the technicals are still bullish. Volume is still good. We're still working off that MACD convergence. So right now we're still in the pullback phase of this movement, but we're still looking for a bottom to happen and for a rebound. That rebound is probably going to retest the current highs. In this scenario, the deeper it pulls back, the bigger the rebound is going to be. Right now, we're looking at about 100%. So given this, Oklo looks like a very tradable stock. And then, like we said before, it's just a question of whether or not the market moves up to set another new high. If we get another new high, the uptrend is still intact. If we move up and retest that high and resistance is confirmed, Oklo stock is probably going to be, capped and range bound for a while. But between then and now, there is a pretty robust upside outlook for this stock to rebound.
Yeah, that's a really good look at this one. I think we should just talk about SMR as well.
Right.
Sure.
So SMR is kind of in the same boat. Its chart is a little uglier because this one is a little bit less loved by the market than Oklo. It's got less institutional support, less analyst support, and that's because it has a less visible pipeline. So with this one, there is still that potential for rebounding because we're still working off of a convergence, but there's a potential catalyst because they're at the last report, I think they said they're expecting to announce a firm deal for their first commercial reactor by the end of this year, which would be very bullish for this market, help make that pipeline more visible, help amplify the rebound. So at $21, if we rebound to the current highs, that's 150% gain. So I think that's pretty strong.
Yeah, Chris, I'd love to hear from you. What are your thoughts on both of these nuclear stocks? Do you think they're a buy right now and expect a rebound, or do you think they went up too far too fast and they're just pulling back to maybe where they should be?
Probably more the latter, but that's only because, again, I don't think it's because I don't like the sector. I mean, this is a sector that clearly there's going to be growth. The only way this doesn't really work for them is if there's suddenly a shift away from nuclear as an alternative, and I don't see that happening. I think there's too much momentum now building, people understanding that it's really one of the only real viable options we have as a clean energy alternative for the kind of power nonstop that these data centers are going to need. And I just think these two companies are really in a sweet spot for that. But having said that, you're talking about companies that aren't generating revenue yet. And that's something to be aware of. It doesn't mean that traders aren't going to get in there and have something to do with it. Again, I think it just means that if you're looking at this, and it's harder for me to look at it as a trader because that's not generally my wheelhouse. I'm saying if you're a long-term investor, you just kind of got to know what price you're willing to pay for it and what price you're not. And then you kind of let the traders do their thing. But certainly we're at the highs. Yeah, that's not something I want to deal with. But certainly they're both getting down into areas that I would think are very, very viable in terms of starting a position or adding to a position you already had.
Very good. Well, we normally like to wrap up about now, but there's a couple other sectors I just want to hit on really quick. We won't be able to pull up all the charts, but we want to talk about the metals sector or mining stocks, the rare earth stocks out there. There's been so many moves in those ones. And then Sharman also wants to hear about Bitcoin. Bitcoin usually isn't our specialty, but I'd just like to see, do you guys have any thoughts on where BTC could be heading and what investors should keep in mind with any of the Bitcoin related stocks right now?
What I read about Bitcoin is there are some liquidity concerns, and liquidity just means that there's not enough people buying in the market. And to me, what that means is people that would buy Bitcoin are just kind of on the fences, and because they're not buying it, the stock price is falling down to levels where they might start.
Yeah.
Good. Well, let's talk about rare earth stocks. I'm not sure if there's a specific one we want to talk about quick. There's so many different names out there, but let's do MP. That's a pretty easy one.
They're all trading kind of in sympathy with each other. And I guess I kind of look at this, Bridget, in some ways in similar to what I just said about nuclear. I mean, this is an industry that there's a lot of momentum behind it. And, I think during the financial crisis, we kind of heard the phrase too big to fail coined with a lot of the big banks. I think this is a sector where it's kind of too important to fail. I think we need it. I think there's going to be a lot of input behind it. We may not like the fact that, the government's showing an interest in maybe in some of these stocks, but I think this is just a critical area for the United States. They realize it's a critical area, and we have to start diversifying the supply chain, and these are the companies that are going to do that for us. So,
Right.
but again, a lot of these are speculative companies. Some of them have not even started mining operations yet. So you have to be careful with it. But again, I think it's the right sector if you have a long-term outlook and you have an appropriate risk tolerance, because they're going to be volatile.
Just talking about individual names, Bridget brought up MP Materials. Just this past Friday, got an upgrade from JP Morgan. They say unmatched earnings visibility. That's just good news. Out of all these stocks, it's, to them at least, their operations, their mine, their pathway to revenue and profitability is the clearest, and so that makes them certainly a viable choice for people that want to speculate on this sector.
Yep.
All right, very good. Well, guys, I think we're going to wrap up the names that we're picking today. I wanted to end this show with how we're going to end all of our videos from now on, and that's Bridget's buys. So Chris and Thomas, stick with me and let me know what you think. We talked about so many stocks today. It's hard off the fly for me to just pick one, but this is a name I'm going to add to my Bridget's buys list. I'm going to put this up here for you guys to look at. As soon as the show is done, I'm going to go update this brand new page. We're just launching it today. This is a watch list.
You got your own page.
Yeah, it's going to be at my own page. It's marketbeat.com/Bridget. You can scan the QR code, go to marketbeat.com/Bridget. It's going to be my stock ideas list. And so whatever stocks we talk about on these videos, I'm going to pick one, add $100 of it per day, simulating kind of a buy of $100. And then we can track the performance of some of the stocks that we talk about on the show here and how well they do in the market, just kind of where they move as a group. And so today, this was a hard choice because we talked about 1.5 million names, but I'm going to go with Nebius Group. I think this stock had such a good run up. I think it stood out to me simply because there's so much positive analyst sentiment for this one, and it's down so much from its consensus price target. I think we've talked about it before in videos, and it just seems like there's a market for this as well. And so it could be a risk, who knows, but this is going to be the inaugural first Bridget's buy list. All right, Chris and Thomas, what do you think? Is this a good random name to pick out of the list we talked about today?
I think it's a fine choice for your first pick, Bridget.
I think it's a great choice. Good dip buying candidate right here. Yes.
All right. Well, that is going to go on to Bridget's buys. Again, if you want to check that out, I'm going to add a new name to this with every video we do. If there's more than one stock to talk about, I'll see which one to add to the list. Go ahead and check that out on marketbeat.com. Guys, thanks again so much for joining us today. Sorry we couldn't get to all of the names that you guys shared with us today. We covered a lot of names today, though. I hope it was beneficial. I know the market has been rough today, the last few days. Hang in there, everyone. Let us know how you're doing. Stick with us with some different advice what to do on this kind of dropping market right now. Let's hope for some better news the rest of this week. Thanks for watching, everyone. And as always, happy investing.